We did start working off some of that overbought relative strength yesterday with that sell-off. That's good news. We needed this pullback, right? We needed this break, right? So the whole headline around the bond market yesterday, the jump in interest rates, that sell-off yesterday on those concerns about higher rates started to finally, that was the catalyst that we finally needed. Here's what you need to know before the bell. The markets did sell off a bit yesterday. Finally got that little bit of a pullback that we've been kind of looking for. And nothing really has changed here. We are approaching a sell signal here, but again, it'll be a very mild one at best. But we are starting to approach that 200-day moving average. So we've now got that first level of support. Now, importantly, the 20-day moving average has been very quietly sneaking up here and is about to kind of align with the 200-day moving average and the 100. So there is a lot of support that is building right around 57.50 in this market. So again, if we get a little bit of a pullback here, and we did start working off some of that overbought relative strength yesterday with that sell-off, that's good news. We needed this pullback, right? We needed this break, right? So the whole headline around the bond market yesterday, the jump in interest rates. By the way, it is also not uncommon that Treasury market players short bonds going into the auction to get them cheaper. We saw a lot of that yesterday. It happens just about every auction. But so that sell-off yesterday on those concerns about higher rates started to finally, that was the catalyst that we finally needed. We said, well, hey, we need a reason to bring some sellers into markets, finally break them, get them to actually sell some of their assets after this very strong run here. So that's what started happening yesterday. And again, we're starting to pull back here. But again, we're building a lot of support here. And importantly also too, the 50-day moving average has now bottomed and started to turn up. So that's supportive for higher prices as well. So again, we're getting a lot of really positive bullish price action underneath the surface of the markets. Breadth is improved, all those type of things. So again, this sell-off yesterday was not the beginning of the next leg down in the markets. But again, this is what we've been talking about here for a while, is we need a little bit of a pullback here to get the markets into a better position to start buying it. But when we start talking about kind of the rest of the markets, we kind of went through a lot of sector analysis yesterday as well. So as we were talking about the different sectors, really looking at economic growth versus other areas of the markets, you're seeing a lot of support, right? Economic growth is still triggering around 2.3% for this current quarter. It looks fine. Employment data is fine right now. There's really no sign of recession. And we're seeing economically sensitive sectors continuing to perform well here, which is also telling you the markets are okay with where economic growth is. And again, on a nominal basis, going back to yields for a second, on a nominal basis, 4.3% nominal growth, and you're trading interest rates at about 4.5. So again, interest rates are trading about where economic growth is, which is where we were back in 2006, 2007. Prior to the financial crisis and before the Fed started suppressing rates artificially. So without Fed interventions, which we have right now, interest rates have risen back up to where economic growth should be, which is about normal. It doesn't feel normal, right? But that's about where economic growth is. One of the interesting things that are going on right now is Bitcoin. And again, Bitcoin has been on fire lately. It hit new records yesterday at 110,000 on Bitcoin. Bitcoin extremely overbought here now. It's had just a really terrific run here, really ever since about April the 9th. So again, with that bottom in the markets over tariff concerns, everything else, Bitcoin had sold off going into that tariff announcement, just like the rest of the market. Again, Bitcoin's a great proxy for stocks, right? So risk taking in general. But really, ever since that bottom on April the 9th, Bitcoin's had a fantastic run. Like stocks, it is now extremely overbought here. So if you were buying Bitcoin down here, this is where you kind of start taking a little bit of profits, just reducing your risk just a bit. Doesn't mean go sell everything, not saying that at all. But again, when normally, historically, when you get Bitcoin this overbought, and we can kind of just go back and look at history. Last time we were this overbought was back in early 2025, back in January, and then you had that big correction in price. So again, Bitcoin is very sensitive because it's highly speculative. It's a risk asset, risk on, risk off asset. So it's going to track markets very closely here. So again, really pay attention to these overbought conditions, because typically that's going to revert back into a sell-off at some point. So just, it doesn't mean sell everything. It doesn't mean you have to be bearish on Bitcoin, nothing like that. But just understand that everything's going to ebb and flow in price over time. And again, you've got a risk asset that's got a high beta volatility. It's basically a leveraged stock trade. So when you get really overbought here, that gives you a good opportunity just to take some profits, book some gains, and then look for your next opportunity when it sells off to add back to it. But that's what you need to know before the bell this morning.